Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, March 25th. Mike Boutros with you on the horn. Good to be with you. Ted, Pete, Jay, everyone in the room. Looks like we've got quite a move here late in the week. So SPX coming into support. I have it here on the chart. I'll show you that in a moment. One of the most compelling things to be checking out today, I think, is that support structure. But on the menu, DXY, Euro, dollar CAD at resistance, dollar Swiss, SPX, as I said, is that support here. Kiwi, Aussie, sterling with a deeper cut, gold, and a quick look at peso. Is that a breakout? Could be a nice tell there. We'll wrap it up with a quick look at Bitcoin. Any questions or trade setups, feel free to throw them on the message board. Guys, we did just get the release of GDP for the fourth quarter. This is the final read for the fourth quarter, coming in at 4.3%, slightly bump higher, upward revision from the 4.1% we've been operating off of. Quick run through. There's SPX still at support. Don't think you'll see much of a bump here, but excuse me, we'll come back into it. So let's jump right in. Here's where we are on DXY. Okay, the focus of the start of the week has been 92.28, 92.07. That's the resistance zone that's held the advance for the last 3 weeks since the breakout that we made into the start of March. Here we go. Here we go. Above 92.28, you're looking higher. Next level of significance, I noted, was right around 93.30s, is going to be this highlighted confluence zone. That's the 2011 trendline support, guys. It's the same slope, right? That caught all the pivots on the entire rally, on the breakdown last year, right? That slope was what caught that break. It's that same gradient on the way up. So we're getting close, but we're not quite there yet. So on a weekly standpoint, the only thing we want to focus on for DXY is, do we close northbound of 92.28? An assertive close above that keeps this thing going higher. Excuse me, I'm feeling a little under the weather here, guys. I keep losing my voice this morning. So as is always the case, by the time we get to the end of the week. Anyway, let's jump in. Here's DXY in the daily. No change there. In fact, holding that slope pretty darn well. Here's what the update looked like yesterday. 236 was at 92.46. That's what we just pushed through. So objectively, you're at new fresh yearly highs. You're at new fresh monthly highs. But momentum, not really there on the daily chart. Little bit of a note for concern there. And here's the intraday. And kind of why last night I told you guys the immediate advance might look a little tired, but I mean, you're still constructive. And here's what it looked like from last night. Literally, all we've been doing is riding that trend line higher. Boom, boom, boom. So again, you're mounting divergence here on the intraday. I wouldn't necessarily, be a big proponent of selling the Thursday high, but hey, watch for a reaction here. Next level up, 93.30s is the slope still. The 1618 off the low gives you 93.55. Initial support, you could look for something near 92.46, but it really doesn't come down till the weekly open. Okay, so this is now sort of your near-term support, and you wouldn't want to see any losses go beyond this zone if this stretch is heading higher. So if you're holding longs, a good area to take a little off, maybe bring your stops up to break even. Pullbacks should be governed by 92. Topside levels at 93, 93.30, and 93.55. Any questions on DXY? Keep in mind, it's the close of the week. You still do have core PCE, the personal consumption expenditure. I always say the Fed's preferred inflationary gauge. That comes out tomorrow. No expectations for any off print. The February is supposed to be 1.5, same as we got the previous month, but it does have the potential into the close of the week to upset this. So just keep an eye on that as we head into tomorrow. Questions on DXY. So that's number one. I'm going to take a quick segue into euro, but it's a very similar scenario on the downside, no surprise. I was hoping for a little bit more clarity here on some sort of re-entry, but I didn't get a chance to get it. So if you're holding shorts on euro, look, 1845 was like the level we needed to pivot below. We are below it, but again, it's the same issue. You're not seeing the Momo start to run through. You're not seeing momentum like this on a break, right? If we had got momentum like this, that was a clean break in RSI that just kept going. As you get divergence and sort of this flatlining, if you're not already in it, I wouldn't chase. With the same respect, I wouldn't bail if you are in it for a couple of different reasons. Here's euro on the weekly chart. The break of this level could be huge. A couple things we want to look at into the close of trade tomorrow. A, the slope of this parallel. It's a parallel we've been following since 2015 and 2017 lows. It was so instrumental all throughout that 2018, 2019 decline. But you'll see that this slope has still been a major key pivot. We're there now. We're looking for a weekly close below 1845. Like I just said, 1835 is the high week reversal close from August of last year. We're already below both of those. If we close below this slope, there's nothing till 1690s. Okay, it's a long way down. So the implications are big. Definitely want to watch this weekly close as it relates to that slope. Looking at it on the daily chart, well, looks like a pretty clean lateral break and looks like we closed there yesterday. So that actually gives us the confirmation below 1845. Salut, there's nothing down there till 1695. There's a basic 38.2 of the advance. Something to keep in mind. Another thing, if this break is legit, we should see acceleration here. Why? A break of downtrend support typically and oftentimes can be the sharpest part of the decline, just as a break of uptrend resistance can oftentimes be the sharpest part of the rally. So man, the implications here are huge. Again, I'll bring your attention to the fact that we're poised, right? It looks like you could get a divergent plug here if we close at these levels. We'll watch today's close, not a reason to bail or not a reason to fade, but certainly at this point, something we'll be watching at the close of trade. Here's the intraday. Been kind of a one-sided trade since the beginning of the week. I was looking for a reset on this to try to get in, but never got the chance. Here's the latest euro update. I'm losing my place here. Sorry about that. It was 21st. So here's what it looked like right into the start of the week. This is this right here. We said, all right, this is the focus range. I want to fade 1936, ideally the 120 handle, the top of the range, but this is the level that we need to break. It's the range lows for the month. It's the 100% extension. Again, it's a lateral significance level, 1835. Here was the start of the week. It was picture perfect right off the first level. August high close held at 1936, and then we just tanked. So you didn't even get a bounce here. You didn't get a break and a test of resistance. It was real tight. So if this is legit, like I said, guys, we should actually start to see some acceleration. 1754 is a soft target. 117 into 1694, that's still your key support. That's still your key support. So all things, excuse me, all things held constant, looks pretty clean. My quarrel is I just didn't get a chance to get on the reentry. But if you did catch that reversal from yesterday, man, you just want to hang on here. Stops at break even, next level 1754 and 117 into 1694. Questions on euro? So just a couple of tidbits, you know, before we get any deeper. I was given a presentation yesterday to some of the executives over at IG, and they were talking about what's going on in the markets and stuff. Some charts I just want to talk about real quick. The VIX, a lot of people are always looking at the VIX and what's going on there. And remember, there's no causation, right? This is just a kind of a picture of what's happening. It's not what's going to happen. But just some things to note, because over the last couple of days, it started to materialize. Right, you're starting to see some divergence here. And you can see that more plainly on the daily closes, the VIX making a lower low, the oscillator making a higher low. I say this because there was all this concern that, there's been a contraction in volatility, and this is not conducive for traders, and how long is it going to last, and where are we at? I just wanted to highlight those simple things that these are lows that we haven't seen for a couple of years, I guess a couple of months. This is 2020 rather. Those are the lows that we made in February. So it's been a yearly low, new fresh yearly lows. But the longer these last, the typical breakout, the typical surge in volatility will be. The other thing I wanted to note is not only have we drifted towards those lows, but as volatility was contracting, price was coming into some really key regions, both on the daily charts and the weekly charts. These are very important. The 10-year that everyone was talking about, well, man, looks like that just came off resistance. Now, I'm not saying that to say, oh, well, it's all good. No, I'm just saying these type of things all happening at once suggests to me you want to be paying very close attention to price action over the next month, right? They're writing the monthly and quarterly reports now, and that was a discussion that came up. So I just wanted to bring this to your attention as things in the backdrop to keep in mind. That said, here's a look at dollar CAD. And the oil picture, I'll just bring this up as like a segue, a quick look on the oil picture before we get into dollar CAD. There's been a lot of talk again also of this shipping container that's stuck sideways in the canal, in the Suez Canal. So what impact will that have on prices? You haven't even actually seen that filter in deep into price yet, but I just did want to note that we turned from big resistance. I do still think that the crude trade longer term is constructive, but this was big resistance, lateral resistance, slope resistance, and it looks to me like we just ducked back below a decade-long trend line from 2008. So all of these things are matching up to suggest there's going to be an interruption in what we've been seeing in broader trends, and some things to keep in the backdrop. With that, here's dollar CAD on the weekly chart. Well, that's at a pivotal point too. So the region that we talked about for so long at 25, 2580 into 26, monthly, yearly opening range lows, big zone. Long story short, we broke below it, came into the 88.6, downtrend support. Here's the rebound. Here's the first major hurdle on that rebound. Guys, we talked about this for months. The break yielded an accelerated drop. We're back here again, looking for inflection. A weekly close back above 2620, in my mind, would suggest you got a bigger recovery on hand, that a more important low is just registered there. If we fail here, I don't think you get full-on resumption. Again, you had a divergent move, or pretty close to, not much juice on the downside. I think you go sideways a little bit, but the whole focus is on that 26 pivot and what we do over the next couple of days. Here's dollar CAD on the daily chart. Not only is that 126 handle, 125.80 huge, as the yearly range lows, the January lows, the low day reversal close from February. I mean, it's loaded. If that wasn't enough, it's now the 618 retracement of the monthly range. And it was the initial March opening range low. So that break, again, which we made on the 11th, gave us the accelerated drop. If we break back above this, that's a monthly opening range reversal. So big implications for dollar CAD. Big implications. Just curious, is the 2020 open still a relevant level even though the year ended? Sharif, good question. I don't stress it as much, But what happens is, as I always say, support is support and resistance is resistance. So Sharif, the merit of it being the yearly open from 2020, I don't think that's what keeps the focus on that range, Sharif. But guess what? It was a low here, just pips off. It was, like I said, the low day reversal close from last month. And it was this month's opening range low. So any way you sliced it, 2580, 2590 came up as a level. Whether it's because it was the 20 open, or whether it's because the January low, or was because the February low day close, or whether now it's because it's right on the 618 retracement, right? The more evidence you have to support the level's merits, doesn't matter, right? What the ultimate reason is, as long as we've seen previous price action react there. And I think on dollar CAD, that was pretty telling. Does that make sense? Good question, Sharif. All right, so here is what we looked like on the scalp back yesterday. Yes, he says, thanks. Just trying to understand things at a deeper level. I'm with you. Sharif, keep those questions coming, man. That's perfectly acceptable. I mean, it makes perfect sense. There's probably someone thinking the same exact thing. Here's dollar CAD. The whole focus was the breakout had reached this terminal region, this key region of resistance on the daily chart, key region we just talked about on the weekly chart. Here's what it looks like on the intraday chart. Held in overnight. We held back, pulled back rather a little bit. Here's the 4 hour. I'll bring it to the 2 hour, give you a little closer of a shot here. But we're still in this range right below 126. So again, a breakout here, you're looking at 2665, 2713, 2720. That's the yearly open. This year's open, excuse me, and 618 retracement of the entire advance off that high. So pretty big level, and it's all about the pivot that we see here. Excuse me one sec, guys. All right, so dollar CAD, inflection on hand. We're there. Near-term support 25.15. I put bullish inval at 24.58. You know, it could. I don't want to see if it breaks below the weekly open here. I'd have bigger concerns. But 24.58, yeah, I'd leave it at there. All right, that is dollar CAD. I can't get rid of this tickle in my throat, guys. One moment. I'm sorry. Swissy, not really trading it. I wanted to give an update just because we have been following it here in the webinars, and it's been a pretty good turn. Look at that weekly chart. Really breaking into possible upslope resistance. I told you I didn't have enough evidence to really put emphasis on this slope yet, but it's real basic. Low, high, low. Break the median line, saw acceleration. The 75% parallel was like clockwork support. Here's resistance. Look, if it breaches 94.40, 95, essentially is what we're looking for. 94, 97 is the 50, yeah, upslope or downslope resistance, rather, just higher. But you know, I can't get excited about anything up here at the highs. So the breakout was phenomenal. We had a couple of targets into the 93 handle, all got taken out. We're just looking at this upslope, and I want to keep an eye on this as we get into the close of the week. Here's what it looks like on the daily chart, even more compelling. Still could be exhaustion. You know, you have 3-day rally. He's already covered, you know, half the monthly range in that rally. Momentum, not exciting. So all of these trades, pivot, inflection, some sort of tell into the close of the week. If we buckle higher and we break, you're off. You're off up towards 94, 97. Here's the intraday chart. And here's how important this region was. We're just kind of losing steam up here, right? Again, you'll note the divergence that we're seeing. It's the same sort of picture. Now, if we buckle 93.74 gives out and boom, you break, you're not going to stand in front of it. Same time, I don't want to try to fight that yet. So on whole, all things held constant, this was an objective and clear, decisive break of the weekly opening range. Set a high, you set a low, blast through the highs, look for a late week high. It's Thursday. So wouldn't go chasing these guys, but the trends do look pretty good. You're just at uptrend resistance. So risk for a bit of a setback, but ultimately still a pretty constructive trade. That's Swissy. SPX and number 5 here. Here's what SPX looks like. This thing's insane. We're at support right now. I want to see how the US markets open. Here's what it looked like yesterday. And guys, you can always go out always right before and see how this played out. Here's what it looked like last week. We said, watch out, that 38.2 is pretty big. It converged on downslope support. It converged on upslope support. If we're going to rebound, that's where we want to rebound. But it's still bearish below the high close. We rallied. 618 turned right ahead of the high close. Yesterday, we gave this update where we talked about the 38.2 again, and that slope confluence just lower. $38.75. We're there now. We're there now. If this breaks, it's important to reflect back about the setups we just talked about all those trades, Swissy and all those trades, dollar CAD, which are all just holding like their resistance levels, right? So you can see all of these trades reaching major inflections on Thursday. It puts me in a defensive stance, guys. If you've been riding these trends throughout the week, get defensive, tidy up your stops, maybe lop off a little bit. If this breaks, again, likely see an accelerated drop in SPX, likely see an accelerated rally in dollar CAD, accelerated rally in dollar Swiss. Hell, even Euro give us the next leg down. But a lot of these are really, really important levels. Hey, man, says, sorry for the lateness. How are you? I'm good, man. Great to see you in the room as always. Just talking about the SPX here at big support. Okay, so watch what happens here today into the open of US trade. I can't stress that enough. Questions? So now that we've made that break that I was talking about last night, you want to drop your bearish invalidation level to the high day close. The high day close I've registered back here on March 21st gives you 39.21. That's my new bearish inval. Hey man, I did cover Euro. Yeah, first one or second one. I'll have this up pretty quick. All right. That's SPX. Kiwi, number 6. Here is New Zealand dollar. Wow, what a massive move. As we noted, the break below, and this is exactly, you can hear the excitement in my voice because this is exactly what we were kind of hinting at when we first talked about Kiwi this week. Who was it in the webinar here who brought this up on Tuesday as it was sort of making the initial break? Here's what Kiwi looked like on our last update. This was on the 23rd. And we were talking about the initial break of this major weekly support. This support level, guys, that broke, I liken this level to all the levels we just talked about. Again, I'll reflect back to the dollar CAD and dollar Swiss more specifically, but SPX at support, right? All of these major inflections. Is Kiwi leading? Very possible, very possible. The point was the break below 71.11, 71.50 should breach, should yield an accelerated move. Well, we got it. And not only did we get it, it was pretty darn quick. Here's the daily chart, and here's the daily chart looks like now. So the first level we were talking about is this squeeze level into the 70 handle. It's a basic 236. You guys know how I feel about 236s. I don't go chasing them pretty often. But it also coincided on a nice swing low here from back in December. Man, we closed there one day, but it made short order. Broke right below it yesterday. That's still resistance. Your next major key support zone is just lower. Okay, the 100 off the high, 2 equal legs, 1, 2, 3, gives you 69. The 2019 high gives you 69.40. It's a 40 pip range of support, just lower. Pretty big. Pretty big. So, like I said, this is not only a break of the monthly opening range, but it's a break of the yearly opening range. And that has big implications for Kiwi looking for a late third quarter, fourth quarter low. That's what you would suggest, you would infer from an opening range break that's this clean, that's been tested as support this many times with a break like this. So what's the scalp look like? Well, here's what it looked like on the intraday. We were looking for a pivot right here. Again, that key support level. It's just been a one-way. A little bit rangy here, but nothing really in, no opportunities to get like back in or start a new position. So here's the break, resistance, resistance, resistance. That's your focus range. I do think the immediate decline is at risk into 69. So that's a level you definitely want to keep an eye out, especially into the close of the week here. Any questions on New Zealand dollar? Okay. So Aussie's playing catch up with Kiwi. Kiwi made the break early in the week. Here's Aussie. Not as quite a big level as Kiwi was, but here was Aussie already into the start of the week. You can see as we were publishing this on the 23rd, here's the lateral level in Kiwi, which had already broken. Here's the lateral level in Aussie, which broke later that week, or later that day, actually, I guess the following day. Here's Aussie. So its lateral level of significance was 76.35. Okay, we just broke below that, and it's been a tight coil, sort of cork just right below. So you didn't get the break and sort of accelerated run. I mean, 77 did offer a nice run, but again, big figure, guys. It was a 618 of the rally. It was the March Open. Nice pivot, but that was still mid-range for the month. Here's your March Open. We've been monthly range bound for a while. So is this a break of the monthly opening range? If it is, you'd want to see resistance today at 76.35. You'd want to see an accelerated move to the downside. Momentum is diverging. You're not getting that sort of break, pop, and run, the cascade of orders you'd want to see cleared on the way down. So I think there's more conviction in Kiwi than there is in this. But at the end of the day, a break is a break. Below 76.35, you're looking lower. Initial support 75.63. Your bigger level is down here at 74.60. It's 2 equal legs off the high. So a little bit different of an animal, and that's why I was saying if Kiwi is leading, then that break of the monthly opening range happening super early, then maybe Aussie's just playing a little bit of a laggard here, and you'll still get the spike lower. still could be the case. I just think on both of these, the immediate decline, they just look a little tired, right? Divergence, they just look a little tired. So core PCEs on tap tomorrow. Maybe get some whipsaw action. You get to fade a rally or something, but I wouldn't go chasing any new fresh exposure on the downside from here. All right. So hopefully those commodity currencies will come back into focus early next week. All of them, CAD, Aussie, Kiwi, are just at phenomenal spots. So sterling, here's number 8. CAD yen, if you have time. Yeah, Sharif, I'll take a CAD yen. I haven't looked at it in a while, but we'll take a look. So sterling looks like this. The British pound sort of beaten to its own drum. Here's what it looked like again back earlier in the week. The levels I was getting, how we just talked about some of those levels where I was getting a little concerned on the stretch, like this might be a little bit of a problem. My focus on sterling was right here, 137.40 and 137.16, basically that figure. Downslope support, kind of have some lows there. I was worried about an interruption. Now it's been messy as hell. Okay, so you got the break. Like, what is that? Straddle. I've completely lost efficacy on this. You could try to play with the levels all you want, but at the end of the day, it wasn't really very clean break. You're getting divergence again into the lows. Price action with a lower low, the oscillator with a higher low. So sure, could get a little back and forth. I'm still more inclined to hold the weekly open as bearish inval. But again, it's a break of a lateral level. You'd want to see it extend. Here's sterling. This was a break of not only uptrend support, but also the objective monthly opening range low. If that's a break of support, then yeah, we should be looking for a late month low. Now, it just so happens that we closed below this region yesterday. So that's why I'm saying it's too tight for my liking. But if we were to hold 37.43 today, it's too tight. But if we were, and it pushes lower, you're still on pace for 35.40. That was a big break in my opinion. You're essentially looking at the January highs, the origin of the breakout to this year's high, and it's a 786 retracement from the entire decline from the highs we made back in 2018. So big level for sterling. Big level for sterling. Here's what it looks like on the daily chart, by the way. Weekly, rather. This is why my apprehension of this region. Like, it could still fail here, and no one would bat an eye. It'd still be within the confines of the breakout or the uptrend. If this doesn't hold, especially into the weekly close, then could be in for a bigger problem. So shelving sterling right now. We'll revisit this next week. You do have some GDP numbers on tap as we get into the close of the month. All right, that is British pound. So gold would be number 9. Another snooze fest this week. You've been just coiled and completely range bound. I think we should just be paying attention to the bigger picture in gold. It's absolutely paramount where we are. You guys remember the whole rebound off 1690, 1682 was massive. Big reversal. And we've been looking for failure ahead of 1767, 1763, bearish inval into 1790, this region right here. Last week when we extended, I think what was the high? 1755. We turned like $10 ahead of it. We closed below. Was that the high? We should be looking for the resumptive move. It's just coiled here. So you're looking for either a break of uptrend near-term support to get you moving lower, or more conviction trade would be to spike higher and a short off one of those two zones. We're sitting here in limbo. So influence zone major key range for gold is 1690 into 1767. That's all I'm looking at. Here's gold on the daily chart. And here was our last update. I'll come back to this here on the 21st. Here's the daily chart. We rebounded off of downtrend support, 618 retracement of the advance off of last year's low. Here was the recovery. And like I said, we were looking for failure, ideally ahead of 1767. Now, we did post a pretty big reversal candle here. It's been sort of a slider ever since, but we never really broke anything on the uptrend to give us a play lower. So I still think, this is going to just whip out one way or another before it makes a move. The risk is still for a deeper cut, but it just hasn't materialized yet. Here's what it looks like on the intraday. No change to any of the levels. The only thing I have scratched is that near-term upslope that we were working with, this pitchfork. You kind of just drifted out of it. It acted as like resistance once, pulled off, but it's just been sideways. So don't mind that slope anymore. Look for a break of this week's opening range. Here's your weekly opening, weekly open low, weekly open high. It's just coiled. Bearish invalidation, still 1767, 1763. Break lower, 1706. 1690, right back at it. That's the same zone that we touched right here. Make or break here. Make a decision. Sharif, Bitcoin, I got you on that. I got you on that. 9, 10, and finally, I haven't gotten involved in this one either, but peso looks like it's attempting to make a break of that resistance zone that I was talking about back on the 21st, or was it earlier than that? 18th. So here's where the big support zone was. We talked about the fact that one of my favorite confluences, 618 retracement. This was a 618 extension off that same drop. Upslope support. There was resistance right to the March open. So we rallied right into that. And the last time we talked about it in the webinar, we were right there. Whoops. Here's what it looks like now. So we just broke. But again, it's the same problem I have with all these trades that are kind of like breaking key levels but not giving you the run. When I see a break, I want to see what happened in Kiwi. I want to see a break like that. I do not want to see a break like this. So here's your monthly open. Here's a 38.2 of the drop. Here's downslope resistance. We would want to see a little bit more of an accelerated pop, but again, divergence, same story into the breakout. Makes me think maybe this pulls back into former resistance. Then you move higher. At the end of the day, we need a breakout and a push hold above this level to keep the focus on that 211170 region, the 618 right here. So looking for a more definitive push here in peso, but at least on whole, initially looks like a break of the weekly opening range, looks like a break of resistance. Let's see if it can hold support here above 2080. All right, that's everything I have on my list. Let me jump into your questions that you've thrown out. So CAD Yen. Well, let me hit Bitcoin first, Sharif, because I actually have something set up there. So I've been covering Bitcoin with you guys for a while. Here's what's going on. It's pretty dire here. It's major support. The bulls need to hold 50,000 today if this has any hope of maintaining the current upslope or the current rally. Here's the level that we were looking at. Remember the slope. This is the daily chart. And again, we keep this in log format, guys. Here's the pitchfork off the yearly January lows. Support, support, support. We talked about this when it was breaking. We were like, well, what the heck is that? That should accelerate lower. And we fell into a consolidation. Looks like this is a resolution of that near-term consolidation lower. The 618, like I said, is 50,187 from the advance off of that late February low. Now, this is just like an intermediary target, right? If this break is legit, the monthly open, the reversal close from February 21st, that gives you like 44,000. It's another like $6,000 drop. But first things first, this is a big level, Sharif. So on the intraday chart, This is sort of the focus that we've been looking at. 100 off the high from the near term front, 1, 2, 3, gives you 51,006. So if this break is legit, that kind of rules out the corrective move. The 618 of the rally, like I said, is 50,187. Beyond that, it's risky. 43.7. Again, you're basically looking to like 41,000, 40,066, the high day close from back in January. A big risk here. No slope yet. And I'm inclined, to consider something like this, Sharif. I think it's just too early. You can stretch this and try to work this into the chart. I was looking at this. It's just too early. You know what I mean? It's too early. Now, if this holds and rebounds and the break happens maybe later tomorrow or into the close of the week, and then you see an accelerated move, well, then it gives you some indication of slope in time. It might help. But right now, I just want to focus on what reaction we get like right here. This is big. Sharif, does that help? Curious if you see 5 waves up from the 20,000 level. Seems like we're doing an ABC now from the 20,000 level. Yeah, it could be. It could be. I wouldn't really say I'd have a really clean discernible wave count. You guys know I'm not really big on Elliott. For me, it's when the wave count structure is really apparent and obvious, it great feeds into sort of um, our expectations. But on a structure that long for a trade like this, I don't put much merit into it. Don't put much merit into it. I think the exhaustion on this one is on the merits of its own sentiment. Period, guys. The conversations I've had, and this is anecdotal, with guys across the desks in New York is just insane. From the guy who thinks Bitcoin is going to be what makes their whole company um, rich to the guy who wants nothing to do with it. It's all over the spectrum, but I just think the sentiment is ripe for it. So if you're thinking about sort of an ABC type of truncated pattern, yeah, I think that could happen here. We could get a lot more sideways, but the whole focus was the exhaustion. The third major monthly divergence into a third high was slope. It just looked so tired. It looks so tired. So first things first, guys, look at this pivot today, and specifically 50,187 is I want to see a close above or below that to give us indication for the near term play here. And keep an eye on gold as well. Too many conversations with Bitcoin's the new digital gold, right? And that's how some people are actually diversifying their portfolio, but we'll have to see what kind of impact this has on if risk turns over and Bitcoin turns over too. There goes right out the window your digital gold argument. So I'm very interested to see what kind of pivot we get along these regions. Bitcoin at support, SPX at support. Okay, last thing you wanted to look at was CAD yen. Was that right? CAD yen. Yeah, I got you, Sharif. Here's CAD yen. Let's see what's going on there. Haven't looked at that in quite some time. I don't even think I have a chart up of anywhere else. Take a look. Here's the weekly. So we didn't talk about dollar yen. And before I get into this, Sharif, I just want to show dollar yen. This thing is at huge resistance. We are at uptrend resistance. We are at downtrend resistance. And we've been talking about this level for 3 weeks. What happens here essentially is going to determine for me what kind of yen cross directional bias I want to go with. I just have been focused on this region for a while, and we haven't clearly gotten a break yet. So here's dollar yen on the daily charts. Complete flat line. Rangy, right below the 2019 open. Again, Sharif, we were talking about this earlier. Does the 2019 Open have merit in and of itself because it was the 2019 Open? No, that was 2 years ago. But guess what? We've seen some pretty radical pivots along that plane. Okay, monthly highs, accelerated rallies, accelerated drops, pivot, accelerated drop, etc. So I still continue to look at that right above the 109 handle. But for me, the yen sell-off, dollar yen rally here looks a little tired. And if we take that same approach on CAD yen, well, yeah, it looks a little tired still. Here's the weekly. Is that 786? Oops. So I don't know if I'd want to still stick with this structure, but the one thing I would want to note is this, Sharif, that outside daily reversal you made off the high is a paramount feature that you've seen on a couple of different crosses, and they've all followed through. So I think the threat for the correction was there. The fact that it took you back below slope resistance added to it. Now on this stretch here, if this is legit and you still have a little bit more of a deeper correction, at least just a simple correction, I think you should be looking for resistance ahead of the high day close. You should be looking for resistance ahead of the 618. So that's basically 87.31 into the high day reversal. So this range here, like 87.16, 87.31. This is what you need to see hold resistance. If you get an exhaustion ahead of this zone, I would still be looking for that deeper drive lower, in which case you tack on a quick extension and kind of see the measured move. But I definitely think that the risk is still for a little bit more of a topsy, a turn lower here, or at least maybe a consolidation before the last oomph. Remember, a breach of upslope resistance, it's kind of the same theme. If this is going to be a real breach of upslope resistance, then we really should exhaust faster, move lower, and then rip. Sharif, does that help? CAD yen, interesting pair. I haven't looked at this in weeks, maybe months. He says, yes, sir. All right. Okay, well, guys, if there are other questions, we'll go ahead and wrap it up there. I'm so sorry. I've been losing my voice and a tickle in my throat all morning, so I apologize if I sound a little coarse. But use caution here. It's been a decent stretch. A lot of these plays have been just phenomenal, but they're getting a little tired near term. So the specific ones I want to focus on are going to be the dollar CAD trade, how that materializes at resistance as we try to push here. Keep your eye on gold, the consolidation crunch there. Sharif says, by the way, can you approve my request on Twitter, for SB Squawk? Yeah, absolutely. Sharif, don't forget, guys, and for anyone who's new to the room here, I see a couple new names. Whenever you log on, if you are new, just go ahead and drop a quick sign up form before you send your Twitter request, and I'll go ahead and push that through for you. No worries, Sharif, I got you. All right, guys. Again, sorry about the course voice. I will see you guys on Monday. There's going to be a truncated version scheduled next week. I'll be doing the double webinar release on IG. So we'll be on IG on Monday, IG again on Wednesday for the midweek market update, and then we'll be right here back on SB on Thursday. So full suite still next week. Keep it light into the weekend. Have an awesome weekend, and I will see you guys on Monday morning on Daily FX. Cheers.